The US dollar continues gaining in value, pushing European currencies to fresh lows. Although the European Central Bank is tightening monetary policy and intends to raise interest rates more, investors prefer selling the euro and the pound sterling. Germany, which highly depends on Russian gas, may endure considerable hardship as the economic slump isn't as fast as it was during the pandemic of the global financial crisis. Preliminary estimates of business activity indicators proved the negative trend. The EUROZONE preliminary data was well below the forecast. Only the manufacturing PMI declined to 48.5 points from 49.6 instead of 48.3. The services PMI slid to 48.9 points from 49.8, whereas economists had expected a drop to 49.2. As a result, the composite PMI contracted to 48.2 points from 48.9 instead of falling to 48.3. In the UK, the situation is almost the same. The only difference is that the manufacturing PMI increased to 58.5 points from 57.3 instead of dropping to 46.5 points. At the same time, the services PMI decreased to 49.2 points from 50.9 points, whereas economists had anticipated a smaller drop to 50. There is no wonder that this composite PMI slid to 48.4 points from 49.6. According to the forecast, it should have contracted to 49.2 points. Such weak data and the news about industrial companies, especially German ones, that are planning to move their production from Western Europe to the United States, for example, have a negative effect on both the euro and the British pound. What's more, forecasts for the US business activity are much more optimistic than in Europe, and that's why until the end of the trading week, the greenback is likely to go on rising. On the chart, we see that the euro-dollar pair climbed to the earlier broken level of 0.9900. However, the pair dropped just after it touched this level. At the beginning of the European session, the euro showed another decline and settled below 0.9800. Since the initial movement is speculative, the pair may tumble to the next control level of 0.9650. where historically there was a lower limit of the sideways channel. Notably, short positions are already overheated. It means that the price may show a technical rebound. Meanwhile, the pound-dollar pair resumed falling after a short-lived rebound caused by the overheating of short positions. This proves bearish sentiment among traders. Following the euro, the pound sterling continued falling and broke the level of 1.1200. If the price settles below this level, it may slide deeper to the psychological level of 1.10. However, traders should remember that the overheating of short positions may spur a technical rebound. And that's all for now. We continue to learn developments in financial markets. Subscribe to our channel and follow news with us. See you soon.